Yeah, man, that's crazy. 40 days, God, I've been Swayze. Blew the bid out, that ain't shady. That's a bird, man, I ain't baby. Talking whole pie, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the most high, even low tide, he gon' wet you. Better learn how to dance in the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Cliff, what's going on, baby? How you doing, big time? What's going on?
Man, doing good, man. Another good week.
Another good week, man. Did we get the bag, brother? We get the bag.
Yeah, yes, sir. Every week.
Yes, sir. We got the bag, y'all, man. This one's gonna be we're gonna get in and we're gonna get out because we married. We got families and kids. Yeah, so we love y'all, but damn it, we love our families a lot better, guys. We're gonna dive in this, guys. You know how we do it every single Friday, guys. We do current market analysis, guys. We're gonna do a little bit different, guys. We're gonna dive into this topic here. Man, yo, there's some big changes that's going on at the HUD and the FHA, guys. And because of these changes, is a buyer's market coming? Cliff, we're going to look at a video real quickly, brother, and then you and I are going to respond, man. And the good thing about it, guys, you have a licensed appraiser and a private equity investor on the screen with you right now. So we boots on the ground. Am I right, Cliff?
Yes, sir.
We boots on the ground. So this ain't theory for us. This is fact. So what we're going to do, guys, is we're going to listen to this video real quickly, and we're going to dive into this real fast, guys, and we're going to see exactly what's going on with these changes, guys, and we're going to answer the question, is a buyer's market coming? Here we go. Let's get into it.
Housing data for January out today kind of sent some mixed signals, as you can see here. Housing starts declined by a more than expected 9.8% month over month. Okay. Building permits actually ticked up slightly versus expectations for a decline. Here's the question. Could the chill in the housing space be thawing out? A lot to parse through. I want to bring in for more on that in the broader economic picture, QI Research CEO and Chief Strategist Danielle DiMartino Booth. Reaction to all this.
Now, can I give you guys a little bit of a background about this lady here? She is the former, I think, chairman of the Federal Reserve of Dallas. She ain't no slouch, but she for real. Let's get into it.
Let's start with that data this morning, because the housing starts, I thought, was the bigger concern out of the two numbers that we got this morning.
Well, the housing starts definitely feed right into GDP. We saw kind of a temporary reprieve, a little bit of a bump in recent GDP reports, and it looks like that's going to be trailing off. We'll see. I think demand, though, might be the bigger issue here. We saw Mortgage Bankers Association weekly applications data this morning that showed that applications to purchase a new home have given back nearly all of their gains for 2025, back to where they were in early January.
Well, if you look at this chart here, I mean, there were some months where you had some really big jumps, but then you had equal falls.
Right.
So 2024, as a whole was very volatile. Do you think that's going to happen this year, or do you think we're going to have a little more stability with
Well, it's been really bumpy. The Wall Street Journal had a good story out last week that showed a tremendous number of American home sellers had pulled their homes for sale from the market.
Yeah.
So if you're listening if you got your ear to the ground, a lot of people in the housing community see a major bump up coming in inventory for sale once we hit the spring selling season.
But is that existing, or that's going to be existing, or
That's
new?
going to be existing in
That's
addition
existing. Okay.
to what we know is happening in the Sun Belt, which is still too many homes where we don't necessarily need them, in addition to too many apartments.
Well, at least that'll help with some of the housing crisis.
So, Cliff, man, do you agree with her assessment, man, of when it comes to what she's saying concerning in the springtime, there's going to be an uptick in properties going back on the market?
Yeah, I'm already starting to see that. Starting to see more inventory come on the market. It's staying longer. Matter of fact, a house I'm doing now was a property they threw up on the market, couldn't sell it, so they're trying to refinance it, turn it into a rental property. I'm starting to see that more and more. So, I mean, going along with what she's saying, days on market are ticking up. So, it's what I've been saying for a little bit. It's basically it was going up. That's what was going on during COVID. After COVID, when they started raising the interest rates, it started going slightly down, and now it's gone flat.
Okay. Now, I can see that as well. Now, when it comes to days on market, real quickly here, what are you seeing as far as days on market for existing inventory and new inventory? What do you see as when it comes to the tenure of, let's say, 350 to 450, 450 to 800, and then 800 and above? What are you seeing as days on market?
I think anything under 400 is still strong. It's not bad. Days on market are okay. Once you tick over about 400, that's when you start seeing the days on market tick up.
Yeah.
Especially when you get over like 700.
Yeah.
Depending on the neighborhood. There's some neighborhoods that, man, it's crazy.
What neighborhood are you seeing those luxury homes selling like hotcakes?
Highland Park. Some parts of Dallas. Because it's basically it's natural barriers, right?
Okay.
Highland Park is not expanding.
Yeah, it's not.
It is where it is. Meaning, if you want to buy into that neighborhood, you're going to have to wait for a home to come on the market. So for those luxury buyers, typically, if you want Highland Park, you want Highland Park. You're not interested in going over to Dallas or going over even to Grapevine. You have it's unique in the sense that it has its own ISD, right? Independent School District. That's different than a lot of other areas.
I agree with that. Now, she's going to dive into, guys, changes that are going on with FHA and HUD real quick, and we're going to see if this is going to spur any type of growth. Here we go. Let's get to it.
Well, we places to put people,
we want to see affordability improve. Don't get me wrong. This is not bad news for buyers. This is increasingly becoming a buyer's market. That's good.
Well, that's good. Yeah, let's get those interest rates down just a little bit. So let's talk about HUD, because this is interesting on the federal level here right now. They're denying reports that FHA is going to lay off about 40% of the staff. That's a pretty large cut to that agency.
Wow.
What would that mean for the housing market if we did see that type of workforce cut?
Well, I don't think any of us know. We've seen precedents set where we have large layoffs and don't seem to have any discontinuity in the services that are offered. We don't know. We won't know. But I will welcome any kind of an audit of the FHA the same way I would welcome an audit of the Federal Reserve. And that's because, in recent years, I think a lot of people have tapped into an organization that was really designed just to help first-time home buyers, people who are really struggling, whereas it's become a go-to, and it's even heard to be kind of one of the areas where we're seeing mortgage fraud.
Well, what do you make of this conversation that we're going to see this privatization of Fannie and Freddie? Is that? I think that's still kind of out there, but I don't know how much.
It is. I'm not. I wouldn't necessarily. It's going to take years. You're going to have to work through this. It's going to take years. And B, because Fannie and Freddie have tended to have always had the implicit backing of the U.S. government, I think we're in dangerous territory to suggest a complete privatization that really would revamp the way mortgages are approached in the United States.
Yeah. Okay, that's good to know. It's good to see some movement, at least, nothing else.
Interest rates will go up.
Yeah, they will go up. Why would you say the interest rates will go up, Cliff? Why are you saying that?
If you privatize it,
Yeah.
because the only reason why mortgage rates are where they are right now
Mhm.
is because the United States is willing to pay for it, right? If there's a
Gotcha.
default, the United States government, the taxpayers are paying for that default. So the banks
Mm,
are cool because they give
yeah.
out the money initially
Yep.
and they get their fees,
Correct.
and then and they keep on to the cash flow as well.
Yeah.
So they
Yeah, they
keep
do.
they get upfront fees plus cash flow.
They
Now
do.
if that mortgage goes default, then they can go to the US government on that insurance, on the
Sure
United States
can.
government insurance, and then get the money back for the amount of money they put up initially for that
Yep.
property.
You're right about that. So basically, they're playing with house money. They're playing with house money. If that makes some
Right.
sense, I agree with Cliff. If you privatize the mortgages, guys, that takes away the safety net for a lot of the banks because you're
And
privatizing it.
and you won't have that 3%.
No,
It'll immediately jump to 5, probably 10%.
correct.
Yeah.
Correct. Correct. I don't see it happening at all. Period. At all. Now,
Mhm.
Cliff, let's switch over real quickly with the FHA Shakeup real quick before we dive into this real quickly to the investor side. Now, they're letting out 40% of the workforce with the FA with for in the HUD and FHA. Would you see a negative effect on the market or a positive effect on the market?
I don't think you'll see any difference.
I'll give that 100% as well. Also, I believe that you won't see anything at all because I believe those agencies are already bloated as well, and there's a lot of, I think, fraud and grifting going on there. You won't see it about it at all. I think it may even help a little bit as well because they'll be able to save some money. To be honest with you, so I'm good with that. Now let's pivot over, Cliff, to now investors. Now let's go over to our guys at RE Investor here, Venture, and let's see what he talks about concerning what Redfin is talking about, a major shift in the housing market and how investors can take advantage of this. Here we go.
New data from Redfin is showing a dramatic shift in the housing market in 2025 where houses are not selling. They're sitting on the market for the longest that they have in 5 years, and this is now causing sellers to freak out. With Redfin reporting that the typical home is now taking nearly 2 months to sell, the slowest pace in 5 years. This DOM is up to 54 days and nearly double what it was 3 years ago at the pandemic peak, indicating that this housing market has fundamentally changed.
Wow.
It is now becoming a buyer's market.
Correct.
Buyers have the leverage. Buyers can choose between houses that are sitting on the market, and sellers are now the ones missing out. With Redfin reporting that the months of supply on the market is now also up to 5.2 months. This is up since last year and is the highest months of supply that we've seen since 2019. However, there's something funny going on in this market, everyone, because even though the DOM and the months of supply is skyrocketing, sellers are still refusing to cut the price on a national basis. The prices are still going up, even with record low levels of demand, and even with these houses taking forever to sell.
Now,
Because
Cliff,
the same
Cliff,
Redfin report is showing that the
hold on.
median asking
Cliff, why would the prices continue to be going up, even with properties having a longer days on market? It didn't make any sense. So now, why is that?
Properties are still selling. They're just um, selling below what a lot of sellers would want, right? So
Mm,
I think what's going on right now is the psychological effect of selling something lower than you initially got it for. So if I say, hey Dale, for your car, you got a nice car,
yep.
I came to you, I said 50 racks. You're like, nah, I want a little bit more. I want 55. I'm like, cool.
hmm
A year later, I come back and I say 45. That's
hmm
still a
hmm
decent deal.
hmm
But in your head, you're still thinking, man, but you offer 55, right? So that same psychological effects happening across the market where had higher offers not that long ago. So
Correct.
for them to make that adjustment is going to
Yeah.
take a year or so.
Yeah.
And usually what you see too is realtors try to take advantage of that fact. They say, look what the
Yep.
market's doing. And so they're putting prices on the market that don't justify that price.
Correct.
And that's making it
Correct.
last a little bit longer. So I
Yep.
think what's happening now is y- it's a really good time to figure out what the hot markets are. And I mean like
Correct.
specific neighborhoods, because
hmm
those ones will still sell, which
hmm
tells you those are the areas to be in. Because if you could see right now, it's slow. and yet those areas are still moving quickly. That's the area you want to invest in and stay for the long term, because when the market flips, it's going to be even better. You're going to have high appreciation going on in those
Yeah.
areas.
Yeah. Now, guys, this is for the real estate investors, guys. I'm gonna talk about the real estate investors now. I gotta play my music real fast.
I'm about to bounce back.
So this is gonna be the bounce back, guys. Now, whenever yes, it is a buyer's market. It is. The buyers have all of the leverage. Let me show you guys why I'm saying that real quickly, guys. Clip, I'm gonna show something real fast, man. Real quickly. Let me see here. Let me go back. I'm going to replace this. I'm going to get rid of that. I'm going to show some real fast, Cliff. And I got this email today from Grand Homes. Grand Homes, Cliff. Look at this, man. You see that? It says year one of your mortgage, 4.75%. Year one. Not for the entire tenure of the loan, just year one. Fixed rate. Then it goes to the 6.937% APR.
Yep.
Have you ever seen that? I've never seen it before, to where one year you have a big builder like Grand Homes saying, okay, for 1 year, we're going to give you 4.75%.
Which that's nothing. I don't know.
Nothing.
For 1 year. Like, okay, they ain't really doing much. No, that's a teaser rate.
It is. Because at the bottom it says right here. It says this promotion is based on available rates quoted on February 21st, 2025 at 11:42 a.m. Notice how they put the date and the specific time, because rates can change every minute, every second. It can change. Then it says from Grand Lending LLC, which means they have their own paper, right? Then it says for a 30-year fixed rate, owner-occupied, $806,500 loan amount, 10% down payment, and a minimum of 740 credit score.
So, oh God, okay.
You know what I'm saying? So that's the fine print there. Most folks just read 4.75%. Oh my God, yes, Cliff. How many buyers have 10% put down?
Oh, none.
So it's safe to say that they're going to lean more on the FHA 3.5% down.
Oh yeah. Who wouldn't? I mean, if you only have to put 3% down, most people are going to lean on that, keep the cash. Because if you put 10% down, this Grand Homes, this might be $1 million house right here. That's $100,000.
Yes.
The problem is you put that in your home, it still has equity,
yes,
but you don't get access to it until you sell the home, which could be 10, 20, 30 years, right?
Correct.
But if you had the 100,000 liquid, you could put that in the stock market as an example, and $100,000 over the next 30 years, it could double, triple, quadruple.
Matter of fact, if you want, you can actually put that 100,000, put into a life insurance policy.
Yep.
Right, that is making you 10% compound interest. Borrow it at 4% simple interest, then put it into the stock market. So now you're using the same velocity of money, but you're using it 2 times, and you're making an insane amount of return.
Right.
Versus giving it to Grand Homes and now what?
Right. Yep. Yeah. A lot of people in these situations right now. I mean, it's all because this is an experiment. We've never seen where we went from the lowest interest rates ever. We're talking about people got 2.5% interest rates 30 years.
Crazy.
And 24 months later, their neighbor bought their home and they're paying 6.5, 7%.
Wow.
Next door to each other, same house, 24 months apart, and you're talking about $1,000 to $1,500 a month difference in mortgage.
Correct.
It's crazy.
Correct. That's ripe for investors, guys. Again, let me show this again. If you have Grand Homes offering this type of offer, guys, offering that, they hurting. They hurting. This is letting you know, oh, wait a minute, opportunity. Right now, investors, listen to me, investors. Listen to me. I'm gonna make me and Cliff bigger. Listen to me, investors. Listen to us. All right. Right now, investors. This is, with it being a buyer's market, you become a buyer. You can actually get properties for so cheap right now, it's ridiculous. Now, Cliff is correct. When it comes, it's really going to be predicated upon this here, is how good are you at locating distressed properties? Now, what are distressed properties? It could be a property that is going into pre-foreclosure. It could be a property that actually has boarded up windows. It could have a bad fence, high grass. You can get a list of that from the city for free. That's another thing as well. And then number three, also, it could be someone that actually has had the property on the market. It ain't sold. So they're desperate. They need to sell for some odd reason. Do you have the skills to be able to locate these type of property, these investment opportunities, and negotiate the right way? Those that understand what to look for and how to negotiate, you are going to get immensely wealthy, because Cliff is correct. You can buy below wholesale, right? Invest the capital into increasing the value, refi the long-term debt, get your initial cash back out, put some profit in your pocket up front without being taxed at all. And then what happens is the market adjusts. And then what happens is the rates go down, the appraisal value goes up on this property. Now a property that was worth 100,000 ARV, now maybe worth 150, 175. But you bought it for 50.
Well, let me ask you a question, Dale, real quick. Do you think interest rates will ever go down? Like, I'm talking about, will you think we ever see an average mortgage rate at 4.5, 5?
5 potentially, 4.5. That's a stretch.
I think the same thing. I think they reset the market.
Correct.
I think that's what it was supposed to be. It was always supposed to be 5-6%. That's
Correct.
about right. We just got into an era after actually after 2008, we had to drop it back to spur the economy.
Correct.
And so it got down to the 4s, and it was like, okay, cool. Then after the pandemic, it dropped down to the 2s.
Correct.
And then I think we're here, unless there's another, financial crash, where they have to do it. I think the next years under Trump, maybe we might see 5.5, but that's probably about it.
Yeah, and I would say also, this is when you begin to interview your realtors. Realtors, whenever you want to go out and buy, whether it be investor or retail buyer, realtors are in the business of selling properties. They make no money until a property is sold, right? So therefore, you're going to have to interview them to make sure that they're not giving you bad information. Cliff, how often do we get emails from realtors, man, with bad comps, bad rental comps, and saying that, hey, this property is worth 100,000? You're like, wait a minute, where'd you get this from? And they'll pull comps, Cliff, man, are probably 7 miles away. Like, wait a minute, 7 miles away from the subject property. This doesn't make any sense at all. Am I right, Cliff? Am I wrong?
Yeah, they see what they want to see. A lot of times they don't go through much training. They just kind of look and say, this one's I feel like this one's closer to my home. When
correct,
they forget to focus on the location. If it's closer to your home, that's gonna give you a better idea of it. Then you can start looking at some other features after that.
Correct.
I'm dealing with several homes right now with a realtor. You sit down, you go look at the property, you go, I have no idea how they listed it this way. And I don't know why someone's buying this. It doesn't make sense. It's above the market.
Yes. Yes.
The only reason why I see people doing that is because they have specific areas they want to live in.
Correct.
The kids probably on that same ISD, and they want to stay in that same area, so they're willing to kind of go a little bit above.
Correct. And the same story for wholesalers. Wholesalers are even worse than realtors. It's just trash, man.
Yeah.
But to be sending over to you, man, look at this property here, and then they want you to give them a non-refundable deposit based on bad numbers, and you're like, wait a minute, this don't make no damn sense. How is this property worth $200,000? And this is what they be sending you. Property sales price $150, ARV $225. Huh? You got to put $40,000 into it. I mean, at $190, that's right. It's a good deal. What are you talking about? I said a good deal. It didn't make any sense.
It's the only wholesalers I've ever found that were good to buy from, where they basically, it was wholesalers that didn't do a lot of volume. They
Correct.
maybe got one here and there, and they got a decent deal, and then we'll
Yep.
get rid of it. The ones that do it full time, they ask too much, and they just take advantage of novice buyers.
Every single time. You must know your numbers. Cliff, real fast, man, as we end this out, man, give some free game. Whenever someone is pulling comparables, how far should they go from the subject property when it comes to comparing adjacent properties?
As close as possible.
Okay.
I mean, that's the answer. As close as possible. And I would say this: do not pass up the obvious. This one's not 100% cool. Is it 20%? Like, but are they 80% alike? Are they 70% alike?
Yeah.
Okay, then adjust that 30% and see what the difference is.
Yeah.
Right?
Yeah.
Because what's the first value that we look at as an appraiser is the land.
Correct.
That's the number one. Okay, it don't matter that the house is different. The land
Yeah.
could be the same price. Okay,
Yeah.
now you look at what's called the improvement, which is the home.
Mhm.
So you want as close as possible. And this is what I would say in investing. If it's not obvious, and I mean 7, 8 comps,
Yeah.
relatively simple to see, don't do it because
Yep.
it becomes more difficult to determine the value. And if that is true, then you got to ask for even a deeper discount to make it work.
Sure enough. You got to. And guys, to kind of give it some more game as well, whenever you're buying a property that needs renovation, needs work, follow what Cliff said when it comes to determining the as-is value and the ARV or after repair value. And most investors don't do this. What I'm seeing a lot is a lot of professionals, right, are not detail oriented anymore. They're after the fast buck. So if they're after the fast buck, that wounds you because you are really leaning upon their expertise to give you the right numbers so you can actually make a good assessment of the property. So whenever you're buying a property that needs renovation, one thing that most investors don't do, get the property inspected. Get it inspected by a licensed home inspector, right? Yes, have your realtor pull some comparables, right, which is great. Double check those numbers. Double check them. It's easy for you to do. Get as close as possible to the property. If you see a property, one of the comps is 6 miles away, that's trash. Needs to go. Trash. 5 miles, trash. Half a mile, we talking. Quarter mile, all right. We talking. We talking.
Yeah.
Square
'Cause if you
footage,
go
250 above, 250 below.
right. Yeah. If you get the only reason why you start seeing 4 miles and 5 miles, I've seen that, and I've gone out that far before, but those are like rural properties on 6, 7 acres.
Yes.
Then it makes sense because it's just because the land size is so big, you have to go miles out.
Got to.
But if it's not rural like that and it's in the city, no, there's no reason for you to go that far.
Put it like this, guys. I'll give you an example real quickly. This is Cliff. Cliff, we bought a property in Florida, right? We bought it for $950,000, right? And we actually had a renovation budget of $600,000. Now the ARV was $2.8 million, right? So Cliff, we had a renovation budget of $600,000, and that came from our GC. Is it right?
Mm-hmm.
How much did we actually spend out of that whole budget?
Was it like 375, something like that?
Mm-hmm. So the guys, look at the numbers real fast. If we had a budget of $600,000, guys, right, and we only spent $375, how much money did we pocket, guys, on that? $225,000. What was our renovation profit? So we not only did we pocket money up front when we acquired it, we made money on the renovation. Am I right, Cliff?
Right.
It's because we knew our numbers. We double checked the so-called experts. Don't be afraid to double check them. Don't be afraid. I mean, one time, guys, man, we were buying a property one time in Jackson, and the appraiser did an appraisal, and he smuggled in his own assumptions. Cliff filleted this man. Now, why is that important? Cliff, whenever a appraiser brings in an assumption, what must he do?
Oh man, if he's starting to assume, then the valuation's based off what he's assuming, right?
Mm,
I mean, we don't know the details that he's going off of. That's what I
mhm.
was trying to say. Cool, you got your assumptions. I just need to know what those assumptions are based on,
Yeah.
right? You can't just come up with them. I think I think his point was, I think you guys are doing a mid-tier renovation. That's interesting. That's not the
Yep.
information we gave you. We gave
Yep.
you a renovation that's going to be much larger than that, but that's the value he gave.
Yeah, but and Cliff said, "Where is that? Did you write that assessment down in the report?" He said, "No. You know that's part of our training. So now you have an appraiser talking to an appraiser now." So he said, "Oh snap!" He said, "Yeah." He said, "I know the training. So write it down." And what happened? He adjusted the value because he had to. He had to. And we had somebody on TikTok that says they have Lindsay says she has a 3.25% is what I got. Then think I'll keep that rate housing bubble at least 6 months. Hey, Lindsay, I agree with you. Keep that rate, baby girl. Keep it. Don't go
As long as you
nowhere.
can. As long as you
Keep
can.
it. That right there is a phenomenal rate. A good friend of mine has a 2% interest rate. I said, damn.
You'll never sell that.
Never. She said, I ain't going nowhere until I die. I said, that's it. Damn. And he refinanced to a 2%. So he went from a 4.25% down to 2%.
Yeah, I don't know if we ever gonna see that again, unless it's
Never.
a major financial catastrophe. You know what I'm saying? Like it's
Never.
like a 2008 type situation.
Never. We'll never see that at all, guys. Never see that at all. But man, Cliff, that's all I have for today, guys. Man, hey guys, one last thing, guys, real quickly here. We talked about how to locate distressed properties. Real simple, guys. For a reason, real quickly, is we're giving away a free ebook, guys, that walks through how to locate a distressed property and what skills and questions to actually ask the so-called professionals, right? And I put that in quotation marks because 9 times out of 10, these guys ain't professionals. They just have a license. A lot of them are morons. But it is what it is. I digress. Guys, easy for you guys. We're giving away a free book. It teaches how to find, locate, and vet a property, distressed property in your city, county, and state, guys. Click on the link below in the description, or scan the QR code. Or if you cannot do any of those things, direct message me the word real estate, and my team will get you at this link. It is free. We want no money from you at all. Period. Now, also, guys, you actually have a licensed appraiser on the screen. Cliff, you're licensed in Texas and where else?
Right now, it's just in Texas. We're in Dallas and Houston. We'll see about going some other places. We can do some commercial properties. So if you got commercial properties, we're doing that across the country. Just let me know. Go to hunterappraisal.com. Hit me up. If you got a commercial, if you're looking at a commercial property, if you need some consulting to be able to talk to someone through a deal to find out some more information, just holla at me. I've already been doing that. Someone who's actually buying some land here in Dallas to look at their billing like a multi-unit. Just holla at me. Like I said, go to hunterappraisal.com. Just hit me up.
Guys, that is that simple, guys. It is Cliff. Do we normally talk to appraisals a lot of times?
No.
So to guys to have access to somebody that can counsel you on how to understand how to look at as is and ARV values, right? And also that has a construction background and investor as well, guys. That is a triple threat, and you are one click away from all that knowledge. Please reach out to them. And last thing, guys, we are beginning something called the Cash Flow Club Real Estate Community, guys. I'm letting you know about that right now because we are revamping the entire Cash Flow Club thing as well. Also, guys, to have a community, we're going to talk about wealth management. We're going to talk about a real estate investment. We're going to talk about cryptocurrency. Cliff loves cryptocurrency as well. Also, we'll talk about stock investing as well. We're going to have on experts. One of my good friends, he's a banker. He's a banker in H-Town. He's an expert in the stock market. Now he's very limited in what he can talk about because he has a license with a bank, but he can give you kind of the base things as well. And also we have expert also that's good in currency trading. We're going to talk about all of that. So get ready for the Cash Flow Club Real Estate Community, guys, where we talk about all things life. Cliff, you want to say anything, man, before we get out, brother?
Nah, man, just hit us up. You one deal away. Go to the Cash Flow Club and, man, just start learning some things.
Guys, you know I'll be in it every time. You know how we end it before we leave while you can. You see that thing, baby. Take the picture for your mom and them. Holla at your partner. See you guys next week, guys. All right, y'all. Peace.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks.
Hi, my name is Liddell Buggs. Mastering the strategy of locating distressed properties has allowed for me to own about $35 million worth of real estate currently right now. We're talking about new construction, single-family residences, commercial properties, and apartment complex. You name it, I own it. Now, I know you're asking, what does this got to do with you? I'm glad you actually asked. One of the most common questions that I receive when it comes to real estate investing is that they say, Liddell, what is the best strategy I should use when it comes to executing a good investment strategy in real estate? Should I buy and hold? Should I buy and flip? Or should I do a rental scenario? My answer to that question is, why not do all three? But the good thing about it is the investor that masters the art of locating distressed properties will know exactly how and what strategy is the most wisest in that situation. That's the key to this whole thing.
If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.